Good morning. It's Tuesday, January 26th, and we're here a day after former Fed head Janet Yellen steps into the shoes of a very shaky U.S. economy. As if to welcome her, Asian shares overnight took a tumble, with Hong Kong playing the part of Chief Fleming, followed closely by neighboring Shenzhen. Concerns about U.S. stimulus seem to be the main concern, as Chinese President Xi Jinping yesterday addressed the G20. He, of course, is calling for more economic coordination and an open global economy, while his central bank pushes up the yuan on tighter borrowing costs. In Japan, the yen is also up after the Bank of Japan's minutes revealed that it would continue its policy of supporting financial markets. Against the euro, we're looking at a bullish channel that should be soon confirmed if the asset breaks or bounces. Meanwhile, tonight, look out for the Aussie as consumer inflation hits the boards after midnight. European equities also took a plunge yesterday, but on expanded COVID lockdowns and despite positive earnings reports so far. Yesterday, the ECB President Christine Lagarde addressed the World Economic Forum in Davos to say that uncertainty is delaying economic recovery from the COVID pandemic, but the euro is struggling with yesterday's sentiment markets from Germany, all of which failed to meet expectations. The pound hasn't been doing much better despite this morning's labor data, which shows a 10th% increase in unemployment, which is better than what had been expected. Earnings are up, but industrial production fell dramatically from 7.5% in November to 2.4% in December. Again, not as bad as the contraction that had been expected. We can see how that triangle has been harshly breached, and the orange 2-week reverse wedge is also coming under attack. The British Retailers Consortium will be publishing their shop prices index tonight, but for now things are looking down. After a mixed closing yesterday, U.S. index futures are down this morning in the 0.5 to 0.75% region. The dollar resumed its climb after President Biden yesterday signed an order to boost the nation's manufacturing industries and cut U.S. dependence on foreign suppliers. The Nasdaq was a leader amongst greens, but this morning's futures are down 0.2%. That engulfing candle up top appeared just as markets were closing, and all the after-hours trading afterwards doesn't seem to be enough to break the pattern. The MACD, which crossed below its signal on Friday, just could cross back up again today. I guess it's all up to the data. Bitcoin is continuing its indecisive drop from last month's summit, just as the Rothschild investment house increased its holding in CoinDesk's Grayscale Bitcoin Trust. And oil has been developing a slightly felt bullish channel over the past 2 days in expectations of tonight's API report. Finally, we're plunging into earnings today with stars like Microsoft, Lockheed, GE, and J&J hoping to avert a U.S. index fiasco later on. Microsoft has been a constant winner against expectations, and with the performance of Azure during lockdown, we should be expecting more of the same. Johnson's snack division yesterday was a bit of a disappointment, but they're hoping to gain market share with their upcoming single-dose COVID vaccination. Lockheed should be in for some action after the U.S. government last week agreed to buy another 50 of its F-35 jets. And GE has repeatedly upped its EPS revision over the past quarter, so maybe they know something that we don't. Well, that's all we have time for. The deeper we get into the earnings week, the more action we can expect as companies in Corona vie for control over the hotboard. We'll see you again tomorrow.